Hello everyone, our group today will present our case study titled Corporate Reporting Practices on Group Accounting, a case study of Sunview Group Ahead. My name is Yusui, and together with Liu Weihan or Yan Xuxin, we will examine how Sunview reports its group structure and investment based on its latest annual report. In this session, we focus on Part A, the acquisition of control and the significant influence in Sunview Group has invested. First, subsidiaries where Sunview obtained control. For each, we highlight the acquisition debt, equity percentage, and any company's ownership structures. Second, associates, where Sunview has significant influence but no control, and therefore uses the equity method. Third, we conduct a joint venture disclosure check whether any joint ventures are explicitly presented in the notes. To line with accounting requirements, we link the analysis to MFIs 3, MFIs 10, and MFIs 1 to 8. Let's turn to corporate structure snapshot. About this table, we can see if Sunview has control, the investee is a subsidiary and is consolidated under MFIS 10. If Sunview has significant influence but no control, the investee is an associate and accounted for using the equity method under MFIS 1 to 8. After, I will highlight the four key features in this structure. First is a multi-layer control trends, where control is achieved through the intermediate entities. Second, split the holding within the group, such as 51% and 49% held by two group companies. Third, part owned subsidiaries, for example, 80%, 35%, and 95% stakes. Final, significant influence stakes, notably 40% and 30% with unknown subsidiaries. This group identities entities where control has been obtained, which are consolidated under MFIS 10, which MFIS 3 acquisition accounting applies where relevant. It acquired 95% of PTBHL Solar Power Indonesia on 20 November 2023 and 75% of Surge Energy Company on 28 November 2023, both through purchase, with control exercised indirectly via intermediate holding entities. Under MFIS 10, these layered structures still constitute control because the group has power, exposure to variable returns, and the ability to affect those returns. It also completed a 100% share restructuring of Fabulous, Sunview STMBHD, on 29 July 2022, suggesting a group reorganization or common control context relevant to the disclosure. Sunview has three associates: Vista Aluminum Manufacturing Company, Power Asia Company, and the TBS Sunview Company. For Vista, the key milestones include the SSA signed on 27 April 2023, completion on 7 September 2023, the additional 10% SSA on 22 December 2023, bringing the total interest to 30% as none of these investors confer control. Sunview classifies name as associate under MFIS 1 to 8 and account for name using the equity method, recognizing its share of results rather than consolidating associate assets and liabilities. This slide highlights three companies' ownership structures within Sunview Group. First, Solicity IIT is split hold, yet it remains controlled and consolidated because both holders are within the group. Second, Surge Energy is controlled indirectly through Sunview Power Distribution, demonstrating control can be achieved via an intermediate holding entity. Third, the group uses the gas board layer in Indonesia where PT Sunview Asset Management holds 95% of PT THL Solar, requiring clear disclosure of the ownership chain. Sunview assets for subsidiaries under MFIS 10 by consolidating investees where control exists. When control is obtained through an acquisition, MFIS 3 applies. Focus on the acquisition debt, consideration, fair value of net assets, and any goodwill. For associates, where some view has a significant influence but no control, FRS want to advise using the equity method to recognize some view share of results. Business owners, joint ventures are not explicitly presented as a separate category, so we avoid over-claiming JV classification.
Based on the note to the account, the group mainly applies the acquisition method of accounting for subsidiary consolidation, which is consistent with the requirement in MFRS 3, business combinations. However, there are four subsidiaries consolidation are accounted for using the merger method of accounting based on MFRS 28. The main difference for merger method of accounting over acquisition method of accounting is that the asset and liabilities of the acquired entity are recognized and measured at the pre-combination carrying amount, without restatement to the fair value. The goodwill is not presented separately as well, while in MFRS 3, the identifiable asset acquired and the liabilities assumed are recognized at their fair value at the acquisition date. Under MFRS 3, goodwill is determined as the excess of the consideration transferred plus the fair value of non-controlling interest over the fair value of the identifiable net asset acquired at the acquisition date. From the note, PTTHL's acquisition did not give rise to goodwill, because the fair value of consideration and NCI does not exceed the fair value of identifiable net asset. While for Siraj Energy, the fair value of consideration and NCI equals to 377,740 ringgit, which is which is larger than the fair value of identifiable net asset, which is 310,958 ringgit. As a result, the goodwill gain from acquisition of subsidiaries in financial year 2024 is 66,782 ringgit, which is totally contributed by acquisition of Siraj Energy. For goodwill impairment, there are two cash generation units, which are power generation and provision of products and service related to renewable energy. The recoverable amount of CGU has been determined based on value in use calculations using cash flow projections from financial budget and forecasts. From the note, the estimated recoverable amount of the power generation is lower than its carrying amount. Accordingly, an impairment loss of 503,093 ringgit was recognized in the profit or loss. For CGU2, based on the sensitive analysis performed, management believes that there is no reasonably possible change in key assumptions that would cause the carrying value exceed its recoverable amounts. To conclude, the impairment loss occurrence in financial year 2024 is amounted at 503,000 ringgit, in which CGU1 fully contributed to the impairment loss.
For Part C, I will discuss transactions between companies in a group, using Sunview Group Berhad as an example. This topic is mainly governed by two accounting standards, which are MFRS 10 and MFRS 124. Under MFRS 10, a group exists when a parent company controls in subsidiaries, and all group financial statements must be consolidated. Based on the corporate structure disclosed in Sunview's annual report, Sunview Group Berhad is the holding company and controls several local and overseas subsidiaries. Therefore, Sunview forms a group under MFRS 10. Next, I will explain why intercompany transactions are expected to occur within the Sunview groups. Sunview groups is mainly engaged in engineering, procurement, construction, and commissioning services, solar power generation, investor activities, as well as overseas project exclusion. There are three main types of transaction within the group, namely project technical support, sharing now management and administrative services, and the inter-group cost allocation. As clearly recorded in the annual report, the offset amount of such internal transactions reached 4.3545 million. This figure also reflects that the group has fully offset internal transactions in the consolidated financial statements in accordance with the requirements of MFRS. In brief, Sunview's internal transactions are closely linked to its core businesses, and the standardized offset treatment ensures compliance with the relevant accounting standards. In terms of disclosure, Sunview acknowledges the existence of related party and recurrent related party transactions in this annual report. The company also states that these transactions are conducted on normal commercial terms and on an arm's length basis. This is important because MFRS 124 requires companies to disclose not only the existence of related parties transactions, but also whether such transactions are fairly priced. Therefore, Sunview generally complies with the disclosure requirements under MFRS 124. Of course, we also need to be aware that during the consolidation process, according to the provisions of accounting standards for business enterprises, MFRS 10 transactions between companies will be offset. In conclusion, Sunway Group Berhad generally complies with the requirements of MFRS 10 and MFRS 124 in relation to transactions between companies in a group. Intercompany transactions are expected due to the group's business nature and are disclosed as related party transactions and are conducted on an arm's length basis. Although disclosure could be more detailed, the overall reporting and governance practices are acceptable and in line with accounting standards. This is our comment. Thank you for listening.